Hello, hello. Well, let's just wait a few minutes for the traders to join us. There's currently only 25 traders connected to us via this YouTube live broadcast. So let's just hang on there for a few minutes, and we'll start in about 5 minutes. All right, I think we are ready to start. And let's start by looking at the pound. And we're looking at the pound because we had yesterday. Let's go to the 1 hour chart, guys. I want to show you this incredible move to the upside. This was such a fat finger move. Well, no one knows why the pound went on a sick 190 pip rally. All right, within the hour. And then, well, if you look at this candle, its body is 50 pips, and its upper wick 139 pips. So basically, this was such a fat finger, and this is because I think of another poll that showed the Remain voters ahead for by about 1%, I think. So basically, that gave a strong push to the pound to the upside. A lot of bullish momentum, a lot of buyers because of that poll that was released. And that is the reason, guys, that I told you that you have to be careful with the pound. We were actually long yesterday on the pound yen. Let me show you. Let me see if I have a pound yen chart right here. If I don't have a pound yen, I'm gonna get it. I'm gonna get it for you right now because I want to show you how this fat finger actually helped us on our trade yesterday. Okay, so basically we were. Let me just change the profile, the template. I'm sorry. We were long yesterday from about about this level when price broke with I'm sorry, I think it was this level right here when price broke with a previous high. Our stops were obviously below the previous low, which is right here, and our targets were just uh, on the previous structure, all right, just below this area of supply. And what happened is that, well, it was better than 1 to 1 because we were risking 180 pips, and we actually made 230 pips out of the trade. So it was a better than 1 to 1. The position was riskier, so we risked less of our account in a percentage base, but I mean, it was a good setup. If not, we would not have taken it. But I mean, what I wanted to show you is how that fat finger help us get to our targets. If you can look at this candle right here, it also shows an enormous wick and a small body to the upside. And this is not a rejection candle. This is just a reaction to a news. Okay, so this was basically uh, a very good reaction. Well, a good news to bulls on the pound on the short term, and of course, it also was a very nasty bear trap because well, some players out there confused this candle as a rejection candle of this area of supply. And if you don't know the market you are trading, and you don't know the news that are coming out of the markets that you are trading, then you are going to get stuck in situations like this, where you're going to think, wow, just look at that rejection. There was absorption, but then sellers came back and pushed price down, and that is not what happened. That's what you might think It happened just by looking at your chart, but because here in the snipe the trade we follow fundamentals, we know exactly what happened. All right, so we did not get trapped on that bear trap, and we actually our targets got filled for 230 pips. But basically, I wanted to show you that on the pound and how volatile the pound is being on the last couple of days. If we go back to the 4-hour chart, you can see that we did have some bullish reaction. And just let's zoom in so you can see the actual reaction to that 50 level and that 43.91, 43.50 level. You can see that sellers tried to break through a couple of times, well, more than a couple of times, 4 times if I'm not mistaken, but buyers kept buying or kept bidding that price up, and eventually took control, and demand took control, and now we are in a short-term bullish market on the pound. Of course, we don't know what's going to happen with the pound because uh, another Brexit poll might hit the wires, and we'll just have another volatile move to the upside if it is a remain a positive for the remain voters, or to the downside if it's positive for the leave voters. But in any case, we are going to be looking again at these highs on the pound, a reaction maybe for a short-term short opportunity um, to a test of the 43.91 level once again. But for the time being, we remain flat on the pound. And what we are going to be waiting for is this. Just a test to these highs. Um, and and this, we are going to look at the reaction of these highs, and then we are going to decide if we want to go short on the pound or not. But we're being very careful with the pound lately. So let's go to the Euro GBP, and if you remember on yesterday's end of day market commentary, we talked about how we wanted a test of this zone on the Euro GBP. And as you can see, we got that test to the pip, not only because of the fat finger on the pound, but because this was a magnetic demand zone that needed to be tested in order for price to continue its move to the upside. Remember that the markets are never going to be going one way or the other way on a straight line. There's always relief in the market after a strong move, and right here, I think we got it, and we actually went in on the 50. Um, and you know that this is the Fibonacci level from this high to this low, but if we are calculating, and if we think that this is well, we now know that this is the high of the move, then we can actually draw a Fibonacci level to see where we hit it exactly. And as you can see, this is actually this is the 38.2, just above that area of demand. So let's delete the Fibonacci levels that we are not going to use, so our chart doesn't get too clogged. And what's going on right here is that, we hit the 38.2, we hit this area of demand, and of course, we tested again this downtrend channel that was broken at this level. So this was a great opportunity for a long, and our stop should have gone just below that area, okay? And if you were using buy limits, then you would have put your stops around the 77, 79 level, and it would have been a 65 pip risk for that trade for an opportunity to make at least 127. So this was a great risk to reward scenario. We didn't take it because we missed that move, but we are playing that pound bounce on the pound yen. So basically, yeah, we missed it on the Euro GBP, but we are playing the pound on the pound yen right now. So let's go and look at the Euro US dollar. The Euro US dollar is stuck in that range that we talked about yesterday, and it's well, it's pretty obvious that there's a struggle between buyers and sellers here. There was no trade today for us on the euro dollar, but what we are looking here is this kind of a triangle formation that is currently forming at the top of this range. Just let me change the color of the trend line so we can see what, I can show you exactly what I mean. I'm going to use magenta here. So this is basically the triangle that I'm talking about, guys. The Euro the Euro USD, I'm sorry, is trapped inside this triangle. So this can play out one of two ways. One, we can get a breakout and a test of that 50 level, all right? And then I move to the upside, like we talked about yesterday. But this also looks like a continuation pattern. It's not a flag, but it can be also be a continuation pattern. And if it's a continuation pattern, it will break that 50, will break that 1367 level, and it will break those targets. And if it breaks those targets at the 227 Fibonacci extension, then we should be looking higher for maybe the 1483 level for a continuation of this move. So if we break with this triangle, we should be playing that breakout with a buy stop to the upside. Of course, if it's a buy stop, then we are playing the upside. But what I meant is that we could play that break to the upside for at least 98 pips. If it breaks to the upside, I don't think we would be playing that because let me see if tomorrow is a heavy day for the euro. Be checking out the economic calendar right now, and let's see what we have for tomorrow. And for tomorrow, we have well, we have some important news coming out of Britain, the manufacturing production month over month. On the US, on the euro side, we have nothing. Well, you actually what we have on the economic calendar. So we have a manufacturing production month over month on the pound. Uh, and on the US dollar, we have some job numbers and the 10-year bond auctions. So basically, there's nothing fundamental that will move this currency pair. And by the looks of it, it looks like it wants to break to the upside. But again, this is just speculative by my part. But in any case, um, we are I'm sorry, guys. My microphone muted for a little while, but in any case, we're ready for any scenario on the Euro US dollar. Today was a no trade day for us on the Euro US dollar. Now, if we go to crude oil again, it is still trapped inside of this. Well, this rangy market is, well, it's rangy on the 4 hours. If we go to the hourly chart, it's not that rangy, but it really didn't present any opportunity for us today. And when I say didn't present any opportunity, I mean it. We did not have any trades on the crude oil today, but we are still waiting for a nice uh, break of this up structure. If this up structure breaks, we actually have a sell order on crude oil. I'm not going to tell you where it is or when we send it. If you want to have our trade setup sent to you by email and SMS. You just have to subscribe to our service. But in any case, we do have a sell order on crude oil that did not get triggered, and this is the great thing about Snipe the Trade. We had a sell order today that did not get triggered, and they did not get triggered because it didn't break with our levels. And as you can see, price has rallied about 30 ticks to the upside. So if somebody took a short trade today on crude, well, it was the wrong it was the wrong thing to do, because the levels that made for a bear breakout were not broken. And that's how we analyze the markets here, and that's how we can be this accurate. And if this high breaks on crude oil, we are going to cancel that order on crude and move forward. But for the time being, that order remains, and we are looking for at least, if though our levels break to the downside, we are looking for at least a 49.50 level test before moving up. What other market can we go through before we have to before we have to stop this end of day commentary? Well, I think I'm going to stop right now, and we can continue this tomorrow, and we will go through what happens with this euro US dollar breakout tomorrow, maybe the continuation trade on the euro GBP and on crude oil.